All right, what's going on? So I wanted to do a, just a live analysis, I guess, if you will. I wasn't able to start at the 8:30 Eastern news, which was unemployment claims for the week. Typically happens on Thursdays. But as you can see, this 8:30 a.m. candle, this was the reaction and Nasdaq once that report officially hit the market, if you will. And so what I'm just going to do here, like I said, is just do a bit of live analysis. I guess I'll just go back and put in my weekly markups, right? So, the first and foremost is, of course, we have to go to the opening price for the week, which is here, and just doing my little, close on Friday, open on Sunday. Make sure I get this situated. So now I have that level ready. I tend to do like day dividers, right? So I'll just put in Monday real quick. We see where Sunday is at with the gap range measured out. So just by looking from that perspective, right, you can tell, okay, Sunday was where the purple line start. Monday is right there with the M. And then Tuesday, and then Wednesday. When it's Thursday, fine, Wednesday. Got the Wednesday again. Where's that at? It's Thursday, which is today. All right, so now all is well. So we see open up, drop, run higher, consolidate into that range, pushed higher, back to it, consolidated above it, and we broke through on Tuesday, found resistance twice, and then we just been basically consolidating, right? No clear direction. So what I'd be looking at here, let me just use the 5-minute chart. Since this week, since Tuesday has been a bit sloppy, Wednesday was very sloppy. We're just going to be monitoring, right? Just the liquidity. So you see how it's grabbed this buy side so far. Next area I'll be looking at is here. And then after that, be up here. All right, so those would be the next levels. And then as far as on the downside, we had already cleared sell side. If you really look at it from the perspective of Wednesday being choppy, once we got into Thursday and we had this buy side, we dropped down below this sell side here. We dropped down below sell side here. We drop down below sell side also here. You see? So basically all that was happening as far as, the London session going into, well, yeah, so pretty much, yeah, all of the London open session, we're just running sell side liquidity. Anybody that was and buys from any of these levels here, they were removed. And so once that unemployment claim came out, the increased volatility, what was left over, right? We had took 1, 2, 3 pools of sell side liquidity already in just a few hours. And so it immediately rips back above to one buy side pool, most likely going to reach into this one. And then as well, another area to just mark up, right? Because the way that these assets work is that they actually have their closing price where it closes at 5 p.m. Eastern and then reopens up at 6. So it's like an hour break. So I could drag this out to about noon. So that was a closing price. And then we got the opening price. That's about noon. And then also going to measure the center of the midpoint of this. And so now we see, just like with the new week, we have like this new day gap. All right, and so came and took this buy side, and now it's filled that range from where it closed at yesterday and where it opened at technically for today's trading. And looks like it shouldn't be too hard for it to reach up into that next area of buy side. So for now, a very one-sided morning since the unemployment claims came out. And if we take a peek at the dollar chart, see, I already got everything over here labeled. This is actually from this week's open, I believe. No, it's from last week's open where we've just traded to. So this week opened down here, and from Tuesday we were very bullish. We ran from all the way at 104, 100 up into the 105, 800s. So a very bullish day. Wednesday started to basically what you look at as like a retracement, because I still am looking for higher prices on dollar. It's just that what I'm starting to understand is that there are several ways to qualify price action in the dollar when using it for confluence with intraday trading the U.S. stock indices. So the first two are going to be, in a sense, the most obvious. This one is one of them. It's showing strength. Dollar is strong here. You see, there's no doubt about it, especially looking at hindsight, that this was strength. Just aggressive one way, right? Really had somewhere to be, which is up into the levels which it got to, and you see it's having, trouble getting through them, right? The other is clear signs of weakness, right? The dollar showing weakness, and we don't see much of that recently, just because it has really been, for the most part, running, rallying, reaching for buy side liquidity and higher prices. But this leg here, for example, this was several hours here, almost about 10 hours or so. So this would be classified as weakness right here, right? And then, so that's the first two. So you have showing strength and it's showing weakness, clear and obvious, no doubt about it, right? Alternative to those two are the next two, which are, for example, here, post showing strength, now it's showing a lack of strength, because I wouldn't call this clear weakness like we showed here. This is clear weakness, right? Just very aggressive down moves, consolidation, down move, right? Consolidation, down move. This is more so chop, 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 chop. I got aggressive here, but this was a news release, right? Chop, 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 consolidate, chop, 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 right? So it's not showing, in my opinion, any clear signs of strength. It's lacking strength because we just showed strength. It's not showing weakness. So what I would classify it is it's lacking strength, right? Is showing an absence of strength. Not that it's showing weakness, it's just no longer showing strength. So that's number 3. Then number 4, and we'll use this same example. Oh, look, I love this undo button. Where's it at? I need to undo that. Get that back to where I was at. All right, boom. All right. So alternative to that now, right? The fourth and final is, for example, look at this, right? So clear signs of weakness. And then one could view this as a clear sign of strength until we got this, right? This follow-up aggression, basically back down to this inefficiency. But then once it left the inefficiency, did it take out this high? No. So in my opinion, this could also then be considered showing a lack of weakness, right? So that would be the fourth one. So once you've had weakness, clear and obvious, and you look for a pullback for that continuation, if you don't get that continuation and it's not like a real small range consolidation, like this is a pretty large range consolidation. Like these moves, these are 30-minute chart, right? So these moves are hour and a half, 2.5 hours, you know what I'm saying, of one direction. But then as soon as it reaches to a certain level of inefficiency or pool of liquidity or key level, right, then it rejects, and then it reaches for those same things on the opposite end, right? And so we have 4 types, like I said: showing strength, showing weakness, showing lack of strength, and then showing lack of weakness. And those are going to be catalysts that will help set up day trades and the U.S. stock indices. And so now using those four types and, coming to where we are right now, the premise is still that the last time we had any obvious strength or weakness, it was strength. And that was here on Tuesday, right? Wednesday showed a lack of strength. And now what we're seeing on Thursday is pretty much that same thing in a sense, right? We're just seeing a lack of strength. I would really call this weakness because there's not aggressive move consolidation, because although, yes, this is one-sided, look at how small the bodies of the candles are, right? And look at how far it ultimately went when you really take into perspective the levels that I have already identified here, which are key levels for me, is chopping down to these key levels. And if it doesn't commit through them with any type of momentum, then it's still, in my opinion, just showing a lack of strength. I would like to see it rally aggressively from these levels and then begin to, right, push above where it just had basically what I would consider it for now a speed bump. It just had to slow down, retrace a little bit from there, cool off, so that can pick up for its next rally. And just to go to the daily chart to see what that next level would be, see this area up here, that buy side liquidity at 107.195. That's the next level that I'm personally looking for. There are some things in here, like I could measure the half point of this wick and, even possibly utilizing like the opening price of this candle, or, just a whole bunch of different factors, right, that one could use to identify that next level. But just to keep it simple, I just chose the next swing high on the daily, which is above another daily volume imbalance. If we are going to continue, I want to see that as my draw on liquidity, not that it has to get there, but if it does reach for that aggressively and shows signs of strength, right, then that will make it easy for something like Nasdaq, which is a US stock index, to trade lower. And so now that we're back on this chart, you see that this candle before I left over to the dollar chart was full bodied. It was black in color, and it was starting to reject a little bit, but most of it was still filled up with body. But right here, you see it's now turned into a wick. But what I like to see is how right on this level of buy side liquidity, look at how it closed right above it, right? And then we do get some activity trading lower than it here, but now look at this reaction, and these are 5-minute candles, so this candle's about to close here in a few seconds, and so it looked like it was reversing, and there were for sure people that chased it down, and when it ripped back higher here, that was pain to them, right? That was them realizing, oh shit, I chased this. I don't know how I got caught up chasing it, and I just took a loss. Now, a seasoned trader would be able to stomach something like that. They've had their risk calculated, they're understanding that they're using this area of buy side liquidity, and they're trying to be counterparty to that, right? Sell to the willing buyers up here and maybe see it run back down. But in this particular week, I myself, I'm only doing this recording right now and not actually trading, because this is, well, again, for my development, but also because of the fact that the objectives for the week were pretty much already met. And it's an NFP week, which just means that the non-farm payroll is going to be released tomorrow. And typically, from what I've learned, is that Monday to Wednesday morning are going to be the most favorable opportunities in these weeks to find high probability setups. Going into Thursday and Friday, the market tends to get a little bit seek and destroy-ish. And what that pretty much means is that no one's safe. Buyers and sellers in these marketplaces are going to be attacked. And it's to a trader's benefit to know how to scalp in these conditions, because understanding where the liquidity is resting and those areas of inefficiency that will be targeted, most likely, those can be used as exit for profit. And also they can be used to formulate a trade setup pending, a signal provided by the tools that trader uses. And so for me, my favorite tools are the open, high, low, and close. And if you see up here in the top left over here, that OHLC, that stands for open, high, low, close. Every individual candle in every time frame has an open, it has a high, it has a low, and it has a close, right? That's the anatomy of a candle. I do believe I went over that in one of my prior videos, but yeah, so just with that in mind, those are my indicators, if you will. You're given a lot of information from price by the way that it responds once it trades to certain levels, right? For example, the high here of this candle, which was just before the London Open kill zone, but you see it's relatively equal highs with these highs here, right? And so price traded above that and it did reject, right? It closed below it, but there was no follow-up rejection in the sense of an aggressive bearish candle trading lower, challenging this range to the upside. All that happened was a little bit of downside movement, but the next candle closed above, right? Remember this aggressive push higher through the new day opening gap, but then a close back down just above it. And then next candle, right, some trading lower, but by the time we got back over to this chart and there were just a few seconds left, a close above the bodies of these candles. And then how this candle opened up, same thing, right? Dropping at first, but now it's also flipped and it's tapping that new day opening gap. So it's just these different signatures and price are what I've come to grow more familiar with. It's just like anything in life. You have to put in the time to really understand at the highest level, right? You can't just, take shortcuts and think that things happen overnight. They don't. There's no such thing as an overnight success, right? It takes years to become an overnight success. I'm a testament to that. And I'm still not, where I would like to be. So I don't even consider myself successful yet. Right. But I know I'm on my way. I'm putting in the work. I'm doing what I need to do, in my opinion, to get there. Right. I'm gathering the experience. I'm showing up every day. I'm bringing a fresh perspective. I'm learning what I can. I'm applying the things that I learned. Right. And so those factors give me the confidence to talk my shit and to do things like this, even to come on here and and record my live analysis, my thoughts, why I do certain things, what I think will happen next, and why, right? Because of the fact that I've put in the time and I'm going to continue to put in the time. Nothing's going to stop that but me, right? And so what I'm watching here is, see that midpoint, right? There's a reason I apply that midpoint. So it's 12,234.75. The close on this candle, 12,234.75. Literally perfect. Close right on the midpoint of this range. Now we've already tapped now twice at the top, and we haven't shown any rejection in the sense of reason for it to not reach at least to this buy side liquidity pool. Now I did mention how we've seen, right, the dollar. Well, I didn't mention it, but we've seen it. Well, I was mentioning we were trading down to key levels, right? So this is a new week opening gap from last week. We rejected it earlier today. We've traded back down to it again. And so far, it seems like we're rejecting again. But what is it showing, right? Ultimately, it's showing a lack of strength. We're seeing a very big bearish candle. Although it's rejecting off of a potential support level, it hasn't gone and started to run higher yet. If it flips and it starts to run higher, let's say, for example, within the next 3.5, 4 minutes, we get this candle close, maybe above this 105.341 level, right? And that next candle wants to make a tail and trade lower, right? Maybe come back down into this imbalance here and then starts to run higher and takes out this high aggressively. That would be, in my opinion, showing strength. But then there's other speed bumps to keep in mind, right? There's this high, which is relatively equal with these highs. And then there's the new day opening gap, as well as this old area of liquidity, which is marked by this red line at 105.631. So strength would literally mean taking out 1, 2, and then really not slowing down too much at this, this third or third and fourth levels, if you will, even though they're together, right? So I want to see dollar show strength and break above these levels with a large body candle. And that would be, in my opinion, what would be needed to see Nasdaq turn around after it trades up into one or both of these areas. Well, obviously, if it was just one, it would be this one. But to see if it trades into this buy side liquidity pool and has it in there to get up to this one. Just because I'm thinking that it may get up there does not mean that it will most likely continue through. And I've given the reasons why using a dollar chart. And so that's why the recording that I have from yesterday, which it'll probably be posted, I guess, at the same time as this one. So depending on which one you watch first, right? But in that video, I was speaking about taking partials. There was actually a buy side liquidity pool that I felt like the market would target, and that not knowing for certain if it would continue through that level, I was using a text box and I was just explaining that partials would be collected here. And partials pay 100% of the time always, right? Like if let's say, for example, a trader was utilizing these sell side liquidity pools as entries, just thinking that with the dollar not showing strength, because this was the dollar's activity around that same time, right? With the dollar not showing strength, if this is trading down to sell side liquidity, it's possible that it may want to make a run for buy side liquidity after it's taken all of these people's sell stops out who were already long. It may just want to remove them from their trades and then run up towards one of those objectives, right? And so that's why there could be, and there are people who are currently in buys from down here, and it would make sense for them to, for example, right here, take a partial, because we've just now traded into a buy side liquidity pool. There's no guarantee it's going to continue. And so why not pay yourself here when it could 100% shit the bed in the next 30 seconds when we get a new hourly candle open, especially if for whatever reason, right? Like I said, the dollar isn't seem like it's going to close above this 105.341 level, but this is a sufficient support level. This is a weekly support level potentially. And so that next candle could still rip and run higher from here. And so if that was the case, then we would potentially see, look, you see, I got an alert. I actually had this marked up on my chart from yesterday, this same level. It just was on a different layout. And so this one didn't have the alert, but the other one did. And you saw as soon as it traded to this, that alert triggered. And so that's another thing too. You want to keep, alerts at some of these levels. You can get them sent to your phone. That alert also popped up on my phone. And that way, if you're out and on the go and you know what you're doing when you're marking up a chart, you can still, manage your trades effectively, right? Like I said, if someone got into a buy down here at 5:20 a.m. Eastern and they went about their day with their stop loss, let's say below this low, anticipating that it possibly wouldn't get down there, and they were targeting these, these levels of buy side here, and here as potential areas to get out of the trade, it would make sense then, right, to have alerts set here. Somebody could be out having breakfast right now, chilling at the gym or something. Well, not chilling at the gym, working out at the gym, or just chilling in general. And they could get an alert sent to their phone saying, hey, the market just traded up to this level or down to this level. Manage your trade, right? Pay yourself. If you didn't have a exit set at that level per se, and you just wanted to kind of see how it responded first, but you wanted to know when it got there so you could then go to the app on your phone and pull up the chart and see for yourself really quick for a few minutes, maybe run to the bathroom or whatever, and just say, okay, cool, how is it responding at that level? Am I getting speed and magnitude through it? Because that was the premise yesterday. I was looking for to trade above to buy side liquidity, and I was saying that we would need to see speed and magnitude for it to continue higher. And I had the question on there, says speed and magnitude, question mark. The answer was no. There was no speed and magnitude yesterday. And again, if you watch the video that will be posted right before this one, so the video on my channel before this one is the video I keep referencing, right? But yeah, within that video, you saw there was a lack of speed and magnitude, so there was no continuation really. Ultimately, the market got a little bit choppy, and then it started to trade lower. But now today, I would qualify for sure above that 12,245.50 level, speed of magnitude for sure. And maybe not speed of magnitude through this level with this candle, but you see how it closed. And look at the closing price. The closing price 12,254.75. So it closed one tick above, and then you see that next candle opened, right? Actually opened three ticks above at 12,255.25. Traded back down to it. If you look at the low on that candle, 12,254.25. So traded one tick below it, right? And then exploded. Now there's still a little bit over 2 minutes left on this candle. So again, there's no guarantee that it's going to close bullish. It could flip and it could close below this range, right? And that's why I'm saying the importance of taking partials. That was 1, 2, 3 areas to have scaled out of the position and bank some profits in an account, right? And there's no reason that someone who was down here in a buy wouldn't have collected profits at these levels. I mean, when you speak about the Nasdaq and Dow Jones in particular, the amount of points that they can move within minutes is massive, right? And so when you think about like the potential profits, you can trade as low as with some brokers you can trade with, and this is not financial advice first and foremost, but you can trade with as little as 1 cent per point. Right. So meaning that you can get in a trade down here, risking and getting a reward of 1 cent per point of movement. And when I say point on here, I mean like a dollar. Like these are representing dollars of the price of this, but I look at it as points because it's not really something you go to the store and buy, right? So I'm just looking at the numbers like that, like it's points. I'm trying to collect points because those points equate to money. Right, because the money that I'm risking is real money. That's actually why I'm speaking in terms of money about what is possible for a risk and reward. So you can risk as little as 1 cent per point, getting also a reward of 1 cent per point, right? And so from down here, let's just say 12,140 to that first level, let's just say that's 12,220, that's 80 points. And so even if that's only 80 cents to someone who doesn't have an account size to really trade more than 1 cent per point, that 80 cents is 80 cents more than they had, right? And if you look at the range of risk from, let's say they got in at this level, let's say we're saying 12,140. I don't even know I need to use that. I could just look up at the top, right? The low on this candle is 12, let's just say 110. So the risk would have been 30 points to the downside, right? That it wouldn't get down to this low. And your first profit target was 80 points. So 80 divided by 30, and if I'm doing my math right here, that's a little bit over 2. You know what I'm saying? Like about 2.5. So you'd be potentially rewarding yourself 2.5 times what you risked if you were to have been able to know what you were doing and identify, right, this level down here after we've already taken, this was the third time we took sell side. And we got to the end of that London closed kill zone, right? This is the little bit after that London open kill zone. Once 5 o'clock hits, that's like afterwards. So you see it's just running lows, but it's not giving any commitment through this level. On a 1 minute chart or the 5 minute chart, excuse me, we close above it. Then we get an engulfing candle, right? And there's just several different things. Again, you have to know what you're doing, but there are 100% at least one trader, I would say, that was able to capitalize off of this opportunity and bought this market down here. And so from here to there with a risk down here, they were able to bank 2.5 times what they risked if they closed the whole position here. That's not even, necessary. They could have closed some of it here. There's so many ways you can do this, right? Obviously, if you're using the smallest risk unit, like I was just mentioning about a 1 cent per point, you can't, right? What's a percentage of a point of a penny? You can't, right? But let's say, for example, you had on a 2 cent risk per point and reward per point. You could have taken off half here, right? And so with that same thing, now we have to double all of those numbers and whatnot, and to not get into making this a whole math lesson, right? We could definitely have just taken half of that position off here and then taking the other half off here, right? Or watched how it got when it traded here, trailed your stop loss, which is a mechanism in which you can pay basically it's a mechanism in which you can set a level of, okay, if the market comes here, take me out of the trade, right? And so as you're in a buy from down here, you can place a protective sell stop, stop loss order. You can trail it as the market's trading higher and higher. You can trail the market in a sense. And then if it does ever come back down to where you trailed that stop loss to, it will then take you out of the trade there with whatever reward per point, right, is at that level, right? It'll do all of that for you. And that's the same thing as a partial in a sense, because it's going to pay 100% of the time, right? If you have your stop loss trailed and it's in profit, once if the market retraces and comes back down, or even reverses and comes back down or up, and respect to what type of trade you got in a buy or sell, that's going to pay you 100% of the time. And so going into what's typical, though, at least from the way that I was brought into these markets, the lowest that I understood at the time was $1 per point, right? So a lot of brokers that I was using, it was $1 per point was the lowest size that you could use. And so in that case, you're talking about from 12,140 to 12,220, $1 per point, that's 80 points, right? 80 times $1, that's $80. So $80 reward for a potential $30 risk, right? And so we already talked about that's a over two, right? Almost 2.5 or something like that times, as far as like your risk, you'd be making about 2.5 times that at this first level. Getting to that next level, we're talking about that's 100 points. So that's $100 with a $30 risk. So that's 3 times, a little bit over 3. And then just slightly above that, right, this 12,554.5 level. Of course, right, just not even 10 points above this level. So we're about the same, right? About 3 times what you risked. And so that's why it's like there's no guarantee when the market is running that's going to do anything in particular. But by identifying levels of liquidity, especially around certain times of day, it's beneficial, in my opinion, for me to pay myself as price trades to and through some of these levels, just because you never know what's going to happen. Really, anything can happen. Like I said, look, so this is beautiful here. We didn't get to see it live, but this tail down here at the bottom of this candle, it was a green candle, just like this one at some point, all the way down here, a big body green candle looking like it was about to break below here. There's people that will look at that and view that as it's showing weakness. They're jumping in for sales, but you see how it quickly rejected. And now we have, right, this body trading higher. And now, of course, where are we watching? Well, at least for me, I'm watching this 105.341 level. I want to see, does it show strength through that level? If it starts to consolidate and things like that, hesitation is cool, because hesitation kind of tips people to, take a trade here as resistance. Like, oh, it can't even get up there. Let me get into a sell. All of those orders can then be counterparty to, right, continue to push it through there, bring them to pain. But now this again is all possibilities, right? From my perspective, the morning is already over with, right? And that's how quick it can be sometimes. From the time that the unemployment came out, it's been about 40 minutes, right? Unemployment claims came out, it's been about 40 minutes. And if I wasn't any trades in here to see the market trade higher, I would have already paid myself and closed most of those positions. We've already accumulated, depending on where, the trader got in, but anywhere within his range, even if somebody traded the breakout back above this, right, old low. All right, let's say somebody was looking at that level and seeing how it traded above that, and as it was ripping on some smaller time frame, let's just go down to the 1 minute to see if there was any pause. So there was no pause there, but let's just say somebody saw this and chased the buy, right, and it got in at the close of this candle. So let's say they got in at, let's just say 12,200. From 12,200, we've seen from 12,200, right, it tagged here, which was 20 points worth of profit. Then it tagged here, 45 points worth of profit. Tagged here, 50, almost 55 points worth of profit. And then the highest that it got was here, which was about 75 points worth of profit. And with this being, above all of the objectives and that first down close candle, this could have been the complete closure. Okay, I'm out the trade. I caught 70 points today. It traded back above that old low like I wanted to see with momentum. I got in at the close. and it did kind of like get a little bit chopped. If I was watching it on a 1 minute chart, could have been scared right when it traded into here and started to reject. But if someone held strong, could have potentially capitalized off of 75 points, right? And so that's why I'm saying, my opinion, the morning session is over with. It's NFP week, right? Monday through Wednesday morning is going to be the most high probability opportunities. It is now Thursday morning, right? So Thursday can be a little bit of a seek and destroy conditions, but rather today we're seeing just very one-sidedness. But the destroy part of this is that there was a lot of interest for this market to continue lower. As I stated, it opened up here, right? We had the movement above, and then once we broke below on Tuesday, on Wednesday, there was a lot of interest to see it continue lower. And even especially going into how we close right on Wednesday, we open up for Thursday's trading session and we're drifting lower, we drift higher, and then we drift lower again. And at this point, there are a lot of interest. And like I said, the sell side liquidity is people that are willing to sell it down here to see this low be taken out, to see it come down into some of these old, levels from last week, right? Um, especially Thursday and Friday last week where it printed the low of the week. So it pretty much just destroyed those people's hopes in a sense, right? That were trying to short this market by ripping it higher aggressively with the unemployment claims news coming out, and then basically getting a little bit choppy where it's like it's looking like it's rejecting. So if you were sold down here and you got stopped out, it was possible for you to, okay, keep that same sentiment. All right, fuck it, I'm gonna sell up here, but then get run again. And then what tends to happen, and I've been the victim of this, so this is why I've gotten so serious about my studies and just the lengths in which I'm willing to go, things like this, right? Recording myself, so I have film to watch on myself doing a live analysis. But yeah, just for being that victim, right, where you were looking to sell, and then you get a situation like this where it's just ran over 100 points, 130 points from, we're going to say actually from the low, right? 136.25 up to 27. So 140 points, right? So it's run 140 points higher today, right? But after trying to sell it and getting beat up, let's say twice, let's say down here was the first time, and then let's say up here was the second time. It's very possible, and like I said, I've been there, I've done this so many times, to then say, fuck it, it's not selling today, it's probably going to keep buying just like it did here, let me buy now. And then so what happens there is, while this potential retracement or reversal, because you never know, while this is happening, right? Now, if you were to jump into a buy chasing this, now you're just traumatized. You're shaking. You're frustrated. You want to punch your screen because you're like, yo, why the fuck won't it do what it's supposed to be doing? And that's not, see, that's the thing, is that now you've gotten emotional and you're thinking that it's supposed to do what you want it to do, rather than just being objective and accepting, hey, I thought it would continue from here. I was wrong. Maybe I should have really, right, come back and studied why are the potential reasons, right? What were the clues, the warning signs that it wouldn't continue lower? And you have to have some sort of narrative, and it starts really at the higher time frame, to be honest, but also the weekly profile in a sense, right? Like, how has this week been trading? What are the catalysts to make the market move this week, right? How are correlating assets trading? How's the dollar trading, right? And just taking all of that stuff into account across the board. It really comes down to, creating a narrative from a logical standpoint that makes sense. Like, these markets weren't designed to, pay us to allow us to be free and, break out of the rat race. Like, these markets were designed to fleece us, right? To take everything that those who dare venture into them, take everything they have, right? But there's a few people who have been able to, carve out a living doing this. And I 100,000% plan on being one of those people. And this level of commitment, this level of, attention to detail, this level of going back and being willing to do whatever it takes, I feel like is a key ingredient to, what's going to allow me to get to where I'm trying to go. And so, with that being said, I feel like this has been about already 30 minutes or so. And like I said, if I was to have been an active trader that was bullish and I took advantage of any of these opportunities to, go long in this market, my day would be over with already. There's no point in trying to force anything else considering everything I've already mentioned already, right? I won't even do it again because I've already said it. And so thanks for tuning in. Hope you learned something. If you got any questions, comments, or concerns, leave a comment. I'll be sure to get back to you. If you feel like, I deserve a like, leave a like on the video, and I'll catch you guys in the next one. Peace.